In the energy quadrant, taking a look at the July crude oil, which really survived an asset sell-off today. We had really crude finish unchanged, even though if you look at it from a change on the day perspective, it really was down. We finished just a little bit over 110, but really you had that 110.29 settlement yesterday. So given how much commodities, especially other than the precious metals, were under pressure all day with that overall risk asset sell-off tone to the day, we're going to say crude basically survived, and we're going to call it unchanged on the day. On the high side of things, 111.43, that was up 103. But again, on the downside, 108.61 was the low today. That was down 1.52%. So to come off all the way off the deck there to near unchanged, that's a survival. That's a pretty good performance for crude oil, given the way assets were selling on. Inventories are a big deal, and we have new inventory numbers tomorrow. After rising for 3 weeks, the weekly numbers fell, and we've got crude stockpiles in the U.S. really at over 13-year lows. You got to go all the way back to November of 2008 to find crude oil inventories in the U.S. this low, and that's with demand likely to rise. We don't know for sure, but when you look at it, Memorial Day weekend is coming up. That's generally a high demand period of time for gasoline and refined products in general. And then, of course, China is still focused more on reopening rather than going into more lockdowns. We still don't know if that zero COVID policy in China is going to survive, but if it doesn't, and if we get stimulus and we get more movements toward opening, that's about a 4% spike in demand just from China's economy. That's a 600,000 barrel a day spike in demand if it were to happen. So demand looks like it's going to be stronger. Oil inventories are low. Crude oil right now, in the midst of an asset sell-off, survived pretty well on the day.